Hey you guys, it's Yvina here, Executive Vice President of MyEcon, the personal financial success company. And I wanted to do a quick video, so I won't be long on this one. And I wanted to do it as a PowerPoint because I wanted to do my screen recording. So I'm going to show you a quick strategy on how you can drop yourself into a lower tax bracket. For the ones who's not aware of tax bracket, it's a range of incomes taxed at a given rate. Now you got the tax bracket shown according to the filing status. You have the individuals, taxpayers, you have the head of household, you have the married individuals who's filing joint, and you have the married ones who's filing separately. So let's take a look at an example. You have single filer whose income is at $50,000. If your filing status is single and you made $50,000 in 2017, then the first $9,325 of your income will be taxed at a 10% rate. So according to the year, the taxable incomes usually change each year. So for 2017, it will be $9,325 for the 10% rate as far as the single filers. So you'll multiply that by 10%, which would be 0.10, and that will give you $932.50. Your income between $9,325 and $37,950 will be taxed at a 15% rate, and the rest of your income for the year will be taxed at a 25% rate. So depending on what your income is, it will go line by line and it will get calculated according to those tax dues. So the income that the IRS hits the hardest is a bit above the $37,950 because that will place you in that 25% bracket. Now, if you wanted to drop into a lower tax bracket, you got to get at least $12,050 because that will be $50,000 minus $37,950 of your income into business deductions. So from doing that, you won't be in that 25% bracket. You'll be placed at least in the 15% bracket. And also for the ones who feels like, they could work their way to the top, I want you to see this second example. The more money you make, the higher a tax rate you pay. So see this example. You consider working overtime and wanted to make an additional $1,000. If you know you're in a 25% tax bracket, you'll pay $250 in income tax. How did I know that? You'll multiply $1,000 times 0.25 and that will give you $250. You'll also pay Social Security and Medicare employee withholding plus any state tax and other mandatory withholding. So don't be surprised when you discover that 1/3 or more of your pay goes to tax. So the more you're making, you're actually just placing yourself in a higher bracket and not the lower one. So it's actually wiser to try to get yourself to lowering those percentage instead of trying to work your way to the top, because the more you make, the more they're going to take. So what is the solution? Home-based business. Why? Because of the tax savings. So you don't realize that a lot of the stuff that you're already paying for, the bills you're paying for, you could actually put that into business deductions. And why I say home-based business, because you're going to pay for this stuff anyway. Because you're in the comfort of your own home, you're already paying for these expenses as far as rent, mortgage, and some of these that's being shown right here. Cars and truck as far as your mileage, traveling, communication, so you have internet, cable, telephones, and all of that, meals and entertainment. You like to go out to movies or go to a sporting events, and you probably eat out here and there or paying for your kids. So you can actually get to the point of, instead of paying them allowances, you're actually paying wages. So all of this will be included in a home-based business, and that amount that I say, $12,050, you can actually think to yourself, what is it that I usually pay on a yearly base? So if I'm paying at least that amount, I could drop myself into a lower bracket, and you're probably paying more, so that would be good. So a lot of the stuff that you're paying for, you could actually get the government to pay. So I want you to ask yourself this. Would you rather have the government pay for some of those bills and expenses drop your tax bracket and be taxed last, or be taxed before you see anything as far as just a W-2 earner alone and qualify for nothing.